Let's bring in Emmanuel Ojo, CEO of the fintech firm Redtech, is joining us live on the program tonight. Thank you very much for your time this evening, Mr. Ojo. I want to start with a bit of context for our viewers. CBN data pointed out that there were nearly 11 billion transactions going through the Nigerian interbank settlement system in 2024. That was around 25% of all electronic transactions in the country. But relative to that, how does Redtech's performance compare over the last 2 years?
Thank you very much. Happy to be here. Now, with regards to your comment, of course, the CBN, the NIBS transactions was about 11 billion in 2024, whereas Redtech Limited's transaction was about 5.3 billion. And the reason for that variance, or should I say performance of Redtech Limited, is simply because Redtech is more focused on interfacing with multiple business verticals. We interface with both bank-led real transactions, we interface with fintechs, we interface with merchants, SMEs, and large corporations, such as telecommunications institutions as well. And so we were able to obviously increase our velocity of transaction, whereas with NIBS, they majorly narrowed down to bank-led transactions.
There was an interesting industry survey from the central bank that came out a couple of weeks ago, which pointed out that about 62.5% of companies said that, the delays in approvals and the ambiguity in guidelines are key challenge for them when it comes to compliance. And granted, I understand you're not here speaking from the industry, but from the perspective of Redtech and the industry as a whole, where do we find that balance between the need for AMLTF compliance without stifling growth?
Well, as you know, the Nigerian market is a growing market. Take, for example, Redtech. Today, we are processing well over $20 billion worth of transaction, which is over 30 trillion naira. The ecosystem has significantly grown, and there is need for consumers to be well protected by the regulator. Just in 2024, the ecosystem recorded over 1 quadrillion worth of transactions in the digital space. And what I would say, in my perspective, is that it's a combination of the two ecosystems. I start with the regulators. I would say that the regulator could do a lot of assistance in providing, for instance, machine-readable rules, where the requirements that are needed by startups or PSPs, payment solution service providers, are very clear. They could also provide standard approval SLAs that would ensure that within 30 to 60 days, applications can be approved or declined as needed. But I will also advise to the startup companies or the PSPs who are applying for one operating license or the other, that is also good to do adequate research before making the applications. Try to find out what are the required conditions, terms and conditions, for you to be eligible for some of the things that you're operating for. Some of the things we've also observed is that there are times when PSPs sometimes request for licenses for initiatives that are not within the statutory categories. So this requires the regulators to do a level of adequate research to be sure that the end consumer can be well protected. In Redtech, right, we benefit from our conglomerates, where we have a very high corporate governance and risk discipline. So we are very exposed to multiple business vertical that makes us always eligible for any regulatory operating license that we may require.
Expanding to 29 African countries by January 2027, that's a fairly tight timeline. What are the main regional markets you're looking to get into?
Well, our focus is to first expand to West Africa, and after West Africa, we would also expand to East Africa, and then we would expand to North Africa as well. We've already been able to deploy some of our solutions in West African countries, the Umua region, for example, where we are currently present in 5 countries, and we're hoping to expand that as a next phase to the East African region. We'll be working closely with local partners and regulators to ensure that we abide by local rules and standards as we make progress.
What are the timelines for the expansion into North Africa and East Africa? Is that something that we should be expecting towards the second half of 2026?
That's correct. Our target is by second half of the year, which by that time would have made significant progress in our expansion across the continent. We're very focused on how we would ensure that this is done. We will do this through multiple distribution channels within the ecosystems. We would work with aggregators, we will work with regulators, we would integrate to national central switches of multiple countries. One of the things that we'll be providing are single APIs that can provide multiple instances for various businesses.
We've mentioned the figure of the amount of capital that you're looking to raise, $100 million, in order to fund that entire expansion plan. Where's the money going to come from? Is it a combination of internally generated resources, external debt, and equity?
Well, it's going to be a healthy capital stack. It will be, what I mean by that, it's going to be a combination of internally generated cash flows, obviously. We would also leverage debt financing, and obviously equity. We are well regulated, and we have a very good discipline when it comes to cash management. And so we believe that a healthy combination of capital generation would help us propel our goals and vision.
With respect to that $100 million figure, how much of that are you looking for in terms of debt and equity?
Well, I would say a large percentage, as much as we can, for equity. Obviously, you and I know that equity is the most affordable means of financing. So as much, but we also know that sometimes it takes time before you can generate equity finance. So we would do a combination, as I mentioned. We would still continue to leverage on internally generated cash, and we would use debt financing as we feel that there are urgent needs when needed. But most importantly, for a massive scale of expansion, we are very focused on MSME acceptance solutions, where we want to propel POS solutions, for example, physical collections, virtual collections for MSMEs across the continent. We recognize that there's a growing ecosystem within this space, which is over 600 million SMEs in the continent today. And we believe that we want to be a part of that. We also want to use some of these funds to secure the necessary regulatory permits in multiple African continents. We will need to scale our payment infrastructure to be able to accommodate this transaction. As I mentioned today, our payment infrastructure is currently processing over $20 billion worth of infrastructure. But we know that this is within the Nigerian space, which is just of a GDP of about $400 billion. Now, going into the rest of Africa, there's about 3 trillion GDP. That's a larger scale. If you look at the records of remittances into the African continent just about 2 years ago, that shows that over $56 billion worth of transactions just from a single business point came into Africa. We want to be able to put in place a robust infrastructure that would ensure adequate uptime and high success rates.
Right. One last question for you, because we're running up against the clock here. There's been a lot of talk about stablecoins over the last couple of years and how interesting they might be in dealing with transaction speeds, transaction settlement times, especially here in Africa. And we've seen some companies handling billions of dollars in payments with them within the continent. Do you see them having a core place in payment systems within countries, or at least in cross-border payments?
Well, in my perspective, I think for domestic rails, it will be less likely, because from the observation, most of the regulators are still, particularly in Africa, are still observing and trying to put necessary risk framework around it. But in terms of, we can't rule out the benefit of what we can attain in cryptocurrency, particularly when it comes to B2B cross-border payment, where where whitelisting of cryptocurrency can help to compress T+2 settlement into real-time settlement. So I think with regards to cross-border payments in terms of inter-African trade, this would go a long way in terms of compressing T+2 settlements into real-time settlement for us. So that would be my view from cryptocurrency perspective.
Indeed. We'll leave it there for the time being. Emmanuel Ojo, Chief Executive Officer at Redtech, joining us here live from Lagos. Thank you.